Hello everyone, let's have a look at the market snapshot for today. The Indian markets have been looking pretty good. I think everything is in place. The participation very strong. Almost 300 plus stocks above for the advances and close to 200 stocks for the declines. I think this is the fifth straight session wherein the advances have been more than decline. Very strong going there. New leadership. Around 13 stocks made new high against 487 new lows. I think last 20 trading sessions, this is the first time when new highs have been found by double digit stocks. Again, interesting. Uh, I would say good going here too. The breadth. This has been the most integral part about this growth. Uh, See, if the index was just going anywhere, everywhere, I don't think, it would have been a very convincing sort of rise. But then the best part about this particular rise has been the participation and the breadth has been going hand in hand, and like very good numbers again here too. If you look above 20 EMA, almost 350 stocks, above 50 EMA, 300 plus stocks, above 200 EMA, just sub 300 stocks. So very strong breadth for the Indian markets. If we look at the structure of the market, this is Nifty 50. It has just crossed the 50 EMA. The structure is fine. I won't say it is a very strong structure, but what will be needed if at all, this somewhere here the market stays, hovers, and then makes a new high. That will be like really very sustainable sort of. At this moment, I will say it is just good basis the participation and the breadth. I'm not saying the chart is looking very good, but those numbers are very supporting it very well. Nifty 500, this chart looks really good on its own. I mean, if you look, a proper structure has been formed. The bottom was formed somewhere here in the April. They have gone here and now it is hovering around these levels. Some sort of consolidation would be, will make this chart very sustainable around about these levels. But nevertheless, the chart on its own looks good. Participation breadth have been strong, so pretty good for Nifty 500, I would say. No surprises on the trend front. Nifty 50, I think for the first time last 20 plus sessions, I think everything is green here. Trading above 50 EMA, participation is strong, breadth is strong. Nifty 500, same story, bullish, trading above 50 EMA, participation is strong, breadth is strong. US, I think since 5th June, I have been telling that I'll be cautious in the US markets, and no surprises there. Although everything looks in sync, everything looks for the good for the markets, but then here and there, the kind of volatility it brings. I think last Friday, it tanked. The Nasdaq 100 tanked almost 6.5%. Yesterday, it tanked almost 4.5%. That is what I have been warning. Although the chart looks good, the numbers look good, but there is something which is not looking good, and that is based on the US yields, rising dollar, and Bitcoin going down, gold going down. I've been talking about this since 5th of June, and see, that is what is happening. Although the numbers again today also, they look good. If you look at the advances, around 280 advances against 240 declines. New highs, close to 10 new highs against 490 new lows. Breadth above 20 EMA, close to 320 330 stocks, above 50 EMA 320 310 stocks, above 200 just over 300 stocks. So all these looks good, pretty good for the US markets. Even this chart looks very bullish. Like, in no senses anyone can say there's anything wrong about this chart. But then, like I said, I have been very cautious about it since this fall. And I have been very conservative. In fact, I have not made any new positions in the US. My last position was in the Monster Beverages, and I think I have not gone into any other new stocks since then. Yesterday, this almost 4.5% of fall. Again, no one can say this chart there is anything wrong about it. It just looks like a double top here, but then that's pretty okay till the time it is respecting 50 EMA. I won't say it is bearish. Same as the S&P 500, respecting the 50 EMA, but almost a double top here. Russell 2000 almost mirror images respecting the 50 MA, made a new high and now it is falling back. On the chart front, it looks bullish. On the numbers, it looks bullish. But I'll tell you where I find the differences now. Even this was bullish till yesterday, but even this has changed for now. Nasdaq looks bullish above 50 mm. The participation is strong. The breadth has become mixed now. Okay, S&P bullish, trading above 50 mm. Participation is mixed. Breadth is strong. Russell trading above 50 MA bullish, participation mixed, breadth is strong. So if you see, this entire has to be strong. That is when the markets can be termed like they are rising, they are in full-fledged bull run. At this moment, this is just inviting volatility, and that is what we are seeing in the markets. The chart, the numbers, they show a very different story, but on the actual front, something is misleading in the US markets, and that's the reason I have been a little cautious about it, and I'll continue to do so. The dashboard, the most critical dashboard, and this is was my first indicator why I felt the US markets were not in sync with what actually was happening on the charts, on the numbers. See, in no case the yields, the dollar and the equities will rise together. I mean, that's like the best perfect world scenario, and we don't live in a perfect world, and it cannot be a perfect world, as simple as that. So ever since the yields and the dollar started rising, I became very skeptical about the US equities. And that is what is happening right now. The yields are rising, the dollar is rising. Now, the only contradiction here is the VIX. It is neutral. It shows signs of no panic. And this is where, retailers will be handed over the tops of all the stocks, and one fine day we'll see something like some brutal kind of a fall. I'm not anticipating anything, but it is important that we remain cautious in such markets. BTC bearish, gold bearish, simple theme. Investors are not looking for any kind of adventure. They are not looking for any kind of risky bets. So the current scoreboard for me remains: India remains a strong. US for me would be cautious. Macro is neutral. So the takeaway would be: India strong recovery, breadth, participation improving significantly. US markets mixed, volatile. I'll be cautious here. Dollar yields continue to pressure risky assets as we see. Bitcoin, gold remains weak, suggesting risk appetite is still subdued. VIX around 17, indicating no signs of panic. So if you see, there are a lot of very contradictory factors going on, and that is the reason the best space to be in the US markets is to be cautious. If you are in the Indian markets, I think you can look at S&P 500, Nifty 250 small cap. Those are good indexes to be in. That's all from my side. Hope you all found this useful. Thank you so much, and see you next time.